Let's touch on the overall market activity that we've seen. And if you look at the volumes today, 11.79 billion rand passing through.
Yeah, it's
the
not huge. I mean,
markets.
we
Not
had
huge, and we're down
after
around
the US holidays earlier this week, we had big volume coming through. I mean, it got up to 20 billion in the one day. But understand, I think, two things. The market's been floating between, call it 31,000 and 33,000 for more than the year. I mean, the last 7 or 8 months it's been doing this. So what it's doing now is not unusual. The second point is, it almost doesn't matter what happens in South Africa. It almost doesn't matter about our GDP. It's dominated by global economic news. And this week just happens to be a bad week. And our markets haven't fallen.
It's usually the end of the month. We know that this year's
I know, it's strange, but we know that our market hasn't fallen as much as overseas markets.
Yeah.
It's actually done quite well. I mean, the other day the US market was down almost 2%, and we were okay. Earlier on, when the US opened, it was down well over 1%. Now it's down about 0.5%. So maybe it's just digesting those job numbers a little bit, and we'll see what happens during the rest of their trading session. But the week didn't start off well with data out of China and data out of the US, which was negative, and that's it. We've fallen.
This manufacturing activity scenario that's playing out,
probably
softer than most had expected.
Yeah, we've fallen 800 points this week.
Wayne, don't you find that there's a big disconnect with the likes of the countries that have put in place very strong stimulus packages to what we're seeing in terms of economic activity on the ground? Because the equity markets seem to be doing quite well and have benefited extensively, but it's not filtering through to the real economy.
No, it's not. Look, it's if people are overgeared and don't want to borrow, it almost doesn't matter what you do to interest rates. It doesn't help the economy, because we know the developed world at the end of the day works on debt.
Yeah.
And at the moment people are paying back debt. So even if jobs improve, even if personal income gets better, people are paying back debt. So it doesn't grow the economy. So zero interest rates just doesn't have the effect that you think it should have.
Can we say on that premise that quantitative easing has actually been a failure, in a sense?
No, it hasn't been a failure. It's saved, well, I don't know if it's saved, but it certainly contributed towards saving the world's from a really terrible recession, because what it did was it capitalized the banks. Yeah. That's what it did at the end of the day. Banks can borrow from the government at, call it zero, and they can just go and buy bonds earning 3.5% and make money. Second thing it did was it bought all the bad loans out of the system, and the last thing it did was it capitalized the banks. But did it benefit the consumer directly, other than lower interest rates? The answer is no.
Truworths down 2.5% today, closing at 70 Rand. Bottom of the top 40, Bidvest shedding 2.5% as well. Implats also.
Look, I don't think read too much in whether you. I mean, it was just a bad day today. There was no specific news in any of those companies. Bidvest was up quite strongly yesterday, so we're just in a patch here where either the US economy is going to stabilize and get better, which of course the markets will then go up, but the rand might weaken, or there's genuinely serious trouble there. It's not just a mid-cycle slowdown weak patch, and then there's big trouble, because
so if there's big trouble, what would you be doing with your investments?
Look, I sincerely,
right now?
if there's big trouble,
your equity exposure?
If there's big trouble, I suppose you want to own bonds. I mean, at the end of the day, if there's big trouble, you want to own bonds. Whether it's global or local bonds, I'm not entirely sure. But understand, if there is big trouble, it genuinely is big, because there's nothing else people can do. Interest rates are already zero. There's already, I don't know how many trillions of dollars of quantitative easing that's gone into the system. So you hope and pray that this isn't really big trouble. I don't think it's big trouble, but if it is,
bonds are the place to be. Okay, Kumba, a gain of 1.25% today, ending the day off just below 150 Rand.
No, look, I think it's
developments with ArcelorMittal. We know that that's still very much under the spotlight.
That's the story there. But I mean, who knows when that's going to come to resolution? I mean, we probably still be talking about that in a year's time. Yeah. So I don't read anything into the day's movements. It's relatively arbitrary, with the overwhelming majority being negative on the back of US jobs. So there's very little individual company information that moved anything.
And not much company news out this week. We've had, of course, a few odds and ends coming through on the corporate front. Of course, Massmart, Wal-Mart. That is the biggest focus today. With regards to the play now with Massmart, would you be holding back if you hadn't bought into Massmart, or would you buy at these levels?
Massmart looks all right. I think Lewis is cheaper, you know, with a bit of risk. Pick and Pay is probably a bit cheaper, but it's not badly priced. Yeah. I mean, understand it's going to take a while for any benefits to come through from that deal.
Fantastic. In terms of value, where do you see value in the market? Give me stock pick for...
Look, there's not a hell of a
next.
lot of value out there. The market's not cheap. I wouldn't say it's expensive enough to collapse, make no mistake about that, but we still see value in the banks. We still see value in some of the diversifieds, Anglos and Billiton. But there's nothing screaming out there. I mean, there's nothing massively cheap out there. You know, you can buy good companies at an 11 PE, like the banks. You know, that's not bad value, but there's nothing out there that says, you know, you have to buy it.